Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, good morning, everyone. Hope all is well. Unfortunately, we have a lot to talk about today because of the war in the Middle East. As you may know, or like most probably you know, that there has been some U.S. strikes on Iran, and Iran is hitting back the U.S. military bases in the region in the Middle East. So Gulf countries, Jordan, Palestine, Lebanon, all are being or are getting affected. So it's not like a very great time, but hopefully everyone will be safe and this will pass with no major drama, more than it is already. So hello Shishi, hello Meza, hello everyone. Thank you. All right, so let's get to it. Let's start with the economic calendar, and then we move to the charts to see if anything aligns between the fundamentals and technicals. Now, the major macro driver or the major fundamental driver is the war. So we will very obviously see risk assets fade, while fear-driven assets like gold, silver, US dollar gain strength. So that's like the rule of thumb. But let's start. Let's go through the economic calendar, and then we'll align it with the charts. So first we start with Monday, which is today. We have 3 data points. We have the S&P Global Manufacturing PMI. It's expected to be less than the previous, but it's still above 50, so it's positive for the US dollar. And then we have the ISM Manufacturing PMI, also a manufacturing PMI, and prices. ISM Manufacturing PMI and prices. So the PMI is expected to be lower than the previous, but still above 50. So it's not really negative. It's still in the expansion territory because it's above 50. So PMI numbers, for those of you who don't watch my analysis sessions, whenever we're above 50, that's expansion territory. Whenever we're below 50, we're in contraction territory. So we're talking about the PMI numbers, okay? Then we have the prices. The prices are expected to be higher. So the previous was 59, the forecast is 60.6. So it's expected to be higher than the previous, meaning that prices for manufacturers are getting higher, meaning that this adds more pressure on, or upward pressure on, inflation, okay? So that's it for today. We move to Tuesday. We have 2 data points. We have the CPI coming from Europe. The previous was 1.7 as per the last reading. It was 1.7. The forecast is no change at 1.7%. This is well below their, or like it's below their 2% target. So they need to start cutting rates before it, like, high inflation turns into, or disinflation turns into deflation, which is a bad thing. And I explained why many times before. So if the actual comes in at 1.7 or more, that's positive for the euro. If not, it's negative. But as we can see now, the euro USD is dropping, pricing in 2 things. Of course, the war, because the USD is gaining power as a safe haven and is gaining strength. Number 2 is that it's pricing in the possibility of a rate cut in March. Okay, So two things are driving the euro to go lower. Um, Aside, of course, from technicals, which we will get to in a minute. Now, next we had the spring forecast statement for the UK. We'll see what they decide on the taxes, on the government spending, on the whole thing for the UK economy. Nothing to predict here or to forecast. We'll have to wait for this to come out, and then we'll analyze it. Okay. Good morning, Celestine. Thank you. Thank you. I am feeling better. Thank you. But I think my voice is still off. All right. So that's for Tuesday. We move then to Wednesday. Okay. So on Wednesday we have the ADP non-farm employment change, which is the preview of the non-farm payrolls. Okay. So the previous reading was 22,000. The forecast was 40 or is 49,000. So if the actual comes in as expected or more, that's positive for the US dollar and the jobs market. If not, it's negative for the US dollar and the jobs market. Now, why is this number important? Because it always gets released 2 days before the non-farm payrolls, and it gives traders a preview of how the non-farm payroll might be. So, if this comes in positive, it means that a high probability is that the non-farm payroll, the NFP, and the unemployment will be positive on Friday. So, this gives the market the first clue on how the NFP will be. Next, we have the S&P Global Services PMI, expected to have no change. We just went through the manufacturing PMI. Now, this is the services PMI. The services sector is the most important in the US economy, especially. The previous is 52.3, the forecast is 52.3 as well. So it's still above 50. What did we say about PMI numbers? Whenever we're above 50, we're in the expansion territory, so we are good. Next, we have the ISM non-manufacturing prices and PMI. So we went through the manufacturing prices and PMI, which will be released today on Monday. This one is the non-manufacturing PMI and prices. So no forecast number for the prices, but the previous is 66.6. The PMI is expected to be slightly lower, 53.5. It's lower than the previous, but still good. It's above 50, so it's still expanding. So if we just like take a step back and look at all the US numbers, the jobs market are doing well. The jobs market is doing well. The PMI numbers across the board, manufacturing, non-manufacturing, services, they're all in the expansion territory. They're expanding. So the US economy is doing well. And since the US is in a war right now, and like the whole Middle East is in war, we're expecting to see a very high demand on the US dollar as a safe haven. All right. So next we have the crude oil inventories. The previous was 15. There was a huge buildup, 15.9, almost 16 million barrels buildup and surplus. Why? Because if we pay attention, or if we closely pay attention to the numbers on the economic calendar, we see that markets actually forecasted or predicted the war, and they started like packing the inventories with more oil, because it was expected that um, this weekend or the past weekend, on Saturday, there was going to be a US strike on Iran, which is a very important player in the oil game. Uh, Iran is one of the most important oil producers and exporters in the world, and they control the Strait of Hormuz, which is like a sea strait, where like 20% of the whole oil tankers pass through. Okay, so like they control a very important strait, which is Hormuz. 20% of the world's oil pass through that strait. Okay, so that's how important Iran is for the oil markets. So that's why we saw a huge gap on oil prices upon the open of this day. Okay, so that's it for Wednesday. Let's move to Thursday. Okay, so initial jobless claims, the previous was 212,000 jobless claims. The forecast is 215,000. Still not very bad. It's within the safe range. It's not like trending up, and it's not building up. Um, so it's in the like safe area. If the actual comes in lower, it means less people or fewer people are claiming to be jobless in the US, which is positive for the US dollar and the jobs market, and vice versa. If it comes in higher, it means more people are claiming to be jobless, which is bad for the US dollar because the jobs market is bad and they need to cut rates to boost the jobs market. All right, makes sense. Finally, we move to Friday. Let me check if we have any questions first. Thank you, Celestine. Hi, Mr. Abi. Thank you, Yahya. Thank you, Meza. Thank you, everyone. Okay, so now let's move to Friday. So on Friday, we have retail sales and core retail sales, which is like basically the same number, but with exclusion of some components of the indicator. All right. So the previous number for retail sales was 0% the forecast is minus 0.3%. So it's expected to be negative. If that's negative, it shows that the consumer confidence in the economy is becoming lower. So that's why it's contracting, or the retail sales is contracting. Now, the core retail sales is expected to have no change, so 0%, and forecasted to be 0% as well. If this comes in higher, that's positive for the dollar. If it comes in lower, that's negative for the dollar. Okay, now we move to the most important part of the day, which is the non-farm payrolls, the unemployment rate, and the average hourly earnings, all going to be released at the exact same time, 5:30 Dubai time, 5:30 p.m. of course. Okay, so the non-farm payroll last reading was 130,000, which is very impressive for the time, for that time. The forecast is a drop to nearly half of this, so that's negative for the dollar and for the jobs market, but that's just a forecast. It could come in at 150,000. God knows. So we'll have to wait and see. Unemployment rate is expected to stay unchanged at 4.3 after it reached, I think, 4.5, 4.6%. It started to drop rapidly to 4.3%, and that's positive for the jobs market. If it comes in at 4.2, 4.1, for example, that's a great improvement in the jobs market, and that would be positive for the US dollar. If it comes in higher, that's negative for the US dollar and the jobs market. Okay, so we have the average hourly earnings. The previous was 0.4% growth. The forecast is 0.3%, so lower than the previous, but still growth. So it might be actually a good reading, even if it comes at 0.3%. So that's pretty much it. What I can tell you to pay attention to is the non-farm payrolls and unemployment rate, because sometimes they come like they give opposite readings, like, or contradicting readings. So the non-farm payrolls come as positive, but the unemployment comes as negative. So you need to to have an open mind and understand what matters more now during this or these times. Is it uh, the payrolls or the unemployment rate? So let me give you like a heads up. This time, the non-farm payrolls is going to be more important than the unemployment rate because of the overall situation in the US. Now, um, of course, make sure that you don't trade the news, trade after the news or before the news. Or if you're very sure of your analysis on higher time frames, it is okay to place some trades before the news, well before the news. And if your stop loss allows it, then like just uh, ride the wave of the news. All right. Thank you, Pearson Hardman. Thank you. All right, so that's it for the economic calendar. Do you guys have any questions before we move to the charts? Do you guys have any questions before we move to the charts? Okay, so we have Meme-tastic. Do you think due to war ongoing, there will be changes in the news? What do you mean exactly? How, like, the news are already changed? Ah, you mean the like the economic calendar? If that's what you mean, they're not going to change it, no, because like the U.S. is very far away from the place of the war or the like the battlefield. The battlefield is basically in the Middle East. The U.S. is very far off, so they're going to have their business as usual. They're going to produce the numbers, and their government offices are going to be working. So I don't think there will be any delays in numbers or changes in numbers. Okay. Fantastic. I hope I answered your question. Yahya asked a very important question, which is, will the war override the economic calendar in terms of impact? 100%, of course. Wars are a much more important driver to the markets than just economic calendars or like economic numbers. Why? Because economic numbers are like they happen like frequently and regularly, every month, every week, every now and then you have the same number coming out. But when you have a war, it's like logically speaking, when you have a war, that's something new to the markets. So it raises uncertainty. It raises the impact and the importance of each update that happens to that war or like situation in general, the geopolitical situation. Now, that's it for. Let me share my chart. Okay. You're welcome. You're welcome. All right. So let's start with the US dollar, the XY. The monthly is very positive, but we are still like we need to break above the 100 level, 100 or 99.7, as we said in the previous week. The weekly also is uh, looking positive, or it's looking bullish so far, at least. The daily is also okay. So look what we have here. We broke above this speed line. That's not even a trend line. That's a speed line, and that's the last um, That's the last line that is holding the DXY in a downtrend. If this one breaks, then we're going to see higher or like stronger numbers on the DXY. Now, and once it breaks, where's 99.7? It's here. Once it breaks this area, it becomes like officially positive. Why? Because look what happened here. It broke above, it retested that same trend line or speed line, and then it got rejected from it. And now we're like expected to continue going higher as long as, like, look, we have this. So it could continue just trending upwards. Okay. And this downtrend that started at the beginning of 2025 could reach an end, and we might start seeing the DXY go higher. Why? Because for those of you who don't watch my streams or don't watch my analysis sessions every week, we're already like originally we're in an uptrend. We're in an uptrend on the DXY, and very recently we just retested the trend line and got rejected from it. So we might see something like this, the dollar reaching somewhere around 120. So imagine what that would do to the markets, to the euro, to the USD, to the GBP, to the Japanese yen. Imagine what that would do. Yeah, it looks very bullish, almost on all time frames. Yeah. So the US dollar is very bullish. That's You're welcome. Okay. Like almost on all time frames, the DXY is showing strength. Now, the exact opposite, the euro, it should be showing the exact opposite, which is weakness. Now, the monthly, we just broke below 100 or like 1.1744, which is the monthly low, last month's low. We broke below that, and that happened obviously after this rejection. So that's bearish. The weekly, okay, so the weekly here, take a look at this. So on the weekly, we had this engulfing candle, the retest or the correction, 50% correction, and then we started dropping. It opened like there was a gap down on Euro USD because there was a gap up on the DXY. So it's the exact same opposite. Okay. So what gaps did we have today? We had a gap up on DXY and gap down on everything against the DXY. We had a gap up on gold, silver, oil, but the biggest of all gaps was the oil gap in terms of pips and percentage points. Like the WTI is up like hello, hello guys, can you hear me? What just happened? Hello, hello, guys, can you hear me? Something happened. Okay, so I think I'm back. I was saying that like the biggest gap of all was on oil. Oil is up like since the beginning of like this trading session, or not this trading session, this trading day. Since the market opened, it's up 8%. Imagine that's huge. Okay. All right. So let's continue analyzing. The euro is all right. So now look what we have here. On the daily, remember I told you 99.7 on the XY. My voice is going. Excuse me. Now, this is the equivalent of 99.7 on DXY, which is 1.1570. If this gets broken, then we have we're going to go next to 1.14 and then 1.10 and eventually 1.01 if this trend continues or this reversal actually continues. So that's what we have now. The last safety net for a euro before it actually drops really bad is the 1.1660 and then 1.1560. Those are like those act as the safety nets for the euro USD. Pardon me, guys. Okay. All right, so that's for Euro USD. We move now to GBP USD. Go to the monthly set. Okay, so on the monthly we have this. It closed bullish, and it closed pretty bullish actually on February, but then it came back to retest this moving average around 1.34. We have the weekly. The weekly is very, very bearish. It closed very bearish last week. And then apologize, guys. On the daily, okay, so on the daily we have like a very obvious support level, which is coinciding with the 100-day moving average or 126-day moving average and the 200-day moving average. All right. So as long as we're above those two and we're closing above, we're still positive on the GBP USD. But given the overall situation, the euro is showing weakness and the USD is showing strength because of the war and because of the fact that it now acts as a safe haven. So this might, if the the euro plays out and drops more, most probably the GBP will drop uh, as well. So we're going to see lower and like these like the support area, the support area that I was talking about is most likely going to be broken if we continue the same trends on DXY and euro, because euro has the most weight of DXY. You know how DXY is like made or created? It's basically a weighted average of different a basket of currencies. So it has euro, it has GBP, so it has a relative value or strength against other or a basket of currencies. So you have the euro, the JPY, the GBP, the New Zealand dollar, um, and I think also the Australian dollar. Or no, the not the Australian dollar. We have the Swiss franc. So all of those um, actually create the value of the US dollar. So what is the highest weight of all of those, or between or among this basket of currencies? It's the euro. It's 60% overall weight in the DXY in this basket of Okay, we're back. Are we back? Can you guys see me? Can you guys confirm that I'm back? Okay, great. What I was saying is that the euro has the highest weight of all among all the basket of among the basket of currencies that the DXY or the USD is measured against. Okay, so that's why when I tell you if euro is going down, then I think it's going to drag the GBP with it, uh, because the main driver here is the dollar strength. If mechanically, if the euro becomes weaker, the dollar becomes stronger. Why? Because 60% of the value of the US dollar is taken from or is the opposite from euro. So if euro goes down, the USD automatically goes up. So if the USD automatically goes up, what happens to GBP? It goes down. So that's why the euro movement is very important, and that's why I keep telling you the euro is the exact opposite, is basically an inverted chart of the DXY chart. Why? Because it's like it moves exactly the opposite because of this mechanical relationship between euro and DXY. All right, so that's it for GBP/USD. Let's see what the yen is doing. Okay, so the monthly closed bearish. The monthly closed bearish, but I think the weekly is doing well. Last week it closed bullish and above a very important level. If you remember last week or like the week before, we placed this alert at 152. If it breaks 152, then it would mean that it's dropping or like it's going to have deeper corrections. But look what happened from here. Like it reached almost, like it was 20 pips away, and then it got rejected 400 pips from that level, which means that it has no plans of breaking this level. Um, and this actually works with our theory on the DXY or the dollar, because it shows that USD JPY is going up while the DXY is also going up based on our analysis. So it aligns. It aligns just fine. Let me see what we have here. Let me delete those. Anything unimportant we don't need. Actually, I don't need this either. We moved from to a different range, so we don't need this. Yeah, this is our new trend line. That was actually a very good setup. I don't know how I didn't take that. Look, on the daily, we had this like trend line, almost a double bottom. We had this engulfing candle. Could have entered that 50% of that engulfing candle was stops here. Yeah, and targeting here. So that's an easy 1 to 4. But no regrets, no problem. We'll catch another one. Okay, then we move to the 4 hours. It's still also bullish. Now, I think it's time to move to the stock market and the gold, right? Mesa has a question. Please go ahead. Did you already? New Zealand and Switzerland currencies are the most stable ones. Switzerland's currency, which is the Swiss franc, is the one of the most stable currencies. Yes, not in terms of how much it moves in the market or how volatile it is, but on how safe it is for people. Like the Swiss franc is also considered to be a safe haven because Switzerland is a neutral economy, and it's a neutral country in general. They don't have an army. They don't have like any alliances with any side of the world. So that's why people use their currency as a safe haven or as a store of value in times of uncertainty. Okay. New Zealand is a little bit different. US took that from Swiss banks. Well, US took debts from everyone. Okay, GBP, JPY, yeah, sure. Let's do that. We go to the weekly. We don't need this anymore. Let's start with the monthly. Okay, so oh wow, it moved this much already. Like this is the first trading day of the month. Look how the monthly candle looks like. It's crazy. It's moved almost like 8 figures in one. Oh wow, 7 figures in one trading day or one session. That was a crazy move. Okay, now it's showing signs of weakness on the monthly, but it's still too early to actually judge this candle. Are we still in an uptrend? Are we still in an uptrend? Yes, we are. Okay, yeah, we're still trending up. The just like how come? Like how? No, there's something wrong here, guys. The monthly candle does not make sense. No, it didn't close yet. February is uh, candle did not close yet. Look, this is about like on February. This is stuck. No, it's stuck. This is not moving. No, wait, guys. Now it makes sense. I thought like it moved 7 figures in one trading session. That would have been crazy, but now it makes sense. Let's try Wanda. Yeah, now it's moving. Okay, yeah. So this makes sense now. This is the previous month's candle. It closed bearish. All right, now it makes sense. It's still it's still trending up. It's above all major moving averages. Yeah, we're still doing fine. Even though we had this big drop, but I believe this was because of JPY. Remember when JPY dropped? Um, like USD JPY dropped, JPY strengthened. Um, okay, the daily chart. Okay, this is still positive to me. It looks positive. This doesn't look very positive, no. The 4 hour chart does not look very positive, at least for now. Now let's see how like what it does. If like if it breaks this low of like 209, if it goes below 209, if you're trading like day trading, um 209 is your pivot point. That's what I can tell you. But as long as it's above 209, you're okay. It's still going up. The Yeah, you were telling me that the FXCM chart is not working. I wasn't reading. Sorry. Is having a problem. Use Wanda. Yes, I just did. Yeah, it was confusing, and I'm not the sharpest now because like I'm a bit sick. You're short on 15 minutes. Let's check the 15 minutes and see what you're doing. Let me see if I get um, now it's dropping. So congratulations on that. But let me see if yeah the 30 minutes is still doing well in terms of dropping. I mean. Yeah, this level is very important, man. I don't know what are you planning to do. Where are your TP areas? This area is very important. 209. Let's see if it breaks it. I don't know what your plans are, but you're like on a higher time frame uptrend. So it's either you just like um, trade your strategy and do whatever it tells you, or you might just like close most of it around this area and like keep the rest running with stops at break even. That would be um, I don't know, a smart strategy to me. Yeah, I got you. I got that you're short on 15 minutes, but I mean, like, what are your plans? Where's your TP? Because you're almost reaching a structure point or the daily pivot point. Just to do something, I'm just curious. We go to the daily chart and we have the open, high, low, close. Oh, okay. Yeah, you can. You can. You can tell me your. I just want to know your TP is. Yeah, I think you'll get that. If it's 208.84, you can get that. Like it's not very far off, but it might like reject from around that area. To be honest, man, I wouldn't go like more than 209.05. I wouldn't because it can reverse any minute now. All right. Okay. So we're done with GBP, JPY. Let's go now to the gold. So obviously gold, this is done. Thank you very much. This is also done. Thank you very much. This is done. And this is done. Okay. So then let me remove the things that I don't need anymore. We go to the weekly. No, we go to the monthly first. Let's see how last month closed. Okay, so on the monthly, it like obviously closed very, 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 very bullish. Okay, very close to the all-time high. It's like $300 away. And then in the weekend, we had the war. So people started placing orders and we opened this gap. Market closed around 290. It opened around 370, so that's an $80 gap. To be honest, I expected it to be more severe than this. Yeah, so the weekly is still very high. And guys, please don't tell me, or I see this question coming. Is it going to close the gap? The question is, it might not. So do not enter trades based on the idea that it has to close this gap. It can like close it after a year. Imagine if you keep selling while the market is going up just because you see like a gap, and that gap has to be filled or closed. Not necessarily now. Okay. Gold all-time high in March. What do you think? You're welcome, Forex with Ray. You are welcome. I think yeah, it's very possible given like the situation, the overall situation now, and then like the war, Iran, the US. Yeah, um, we might see it. It's very close. We're like $200 away. And if you remember, the gold used to make the $200 in a single day. And historically, the first quarter of the year, like the first and the last quarters of the year, are very positive for gold and silver, while the middle two quarters of the year are not so good. So if we're going to start to see a correction, I expect to start seeing it around like the middle of the year, instead of like or after this um, like after this month ends, we might start seeing a correction, or that's in terms of behavior or historical behavior. That's like nothing, that it's not a hard rule. I'm just like trying to collect ideas. So yeah, we might see an all-time high in March, given historical behavior and given that we are in war right now. You're in buys till 440. I think you're going to get this very soon. Okay, so we move down to lower time frames to see, yeah, we're like trending up, all good, life is happy. Um, Higher highs, higher lows. Yeah, still like very bullish. Now, you know what? Like I would be watching for now. Do you see this area, this like green rectangle? Um, I would be waiting for a reaction from here. If it does not react from here, or it does not get rejected, which is like most likely it will not reject from here because of the situation. But if it does, that's a very important level to get rejected from. So we might be looking at a correction to the downside, and we might start like dropping as hard as we dropped here. Maybe it will coincide with a solution. Maybe it will coincide with a ceasefire. Maybe will coincide with like I don't know. Anything could happen. Like politics are crazy, so it might coincide with a solution to the situation in the Middle East, and gold might start dropping. So let's wait and see. So we have two scenarios. It might, which is like 10% chance, it might react from here, or like even 20%, not 10%. 20% chance it might reverse from here, or it might we might get a rejection or a reaction from this area. But like 80% chance is it's going to continue going up, because the war does not look like it's going to get solved anytime soon. All right. Plus, technically, we're still making higher highs, higher lows, so we're still in an uptrend. Nothing shows us, or like we have, we can't see anything that shows negativity on gold yet. Okay. Okay. So now we end with the WTI, which is I think will be the asset of the month, because as I told you in the beginning, in the introduction, Iran is a very important player in the oil uh, game. So we closed at 67, which was already a 6 months high, but we opened almost on. Let me measure it 1 second. So we close here. Yeah, so it's a like $5 gap. Imagine that's crazy. That's an 8% gap, uh, and the swing level, which I mentioned last week, was around this area, which is 76. Once we break above this and close above it and stabilize above it, then we have something we call a failure swing in technical analysis. So we might start seeing higher highs, and we might even reach 90s or even hundreds if this war continues. Okay. Hello, Toxic Love. Yeah, so we're almost like we're done. If you guys have any questions, please let me know. I'll stick around for a couple more minutes if you have any more questions. Bye bye, Pearson Hardman. Thank you, thank you. All right. So no questions. All right, ladies and gentlemen, thank you very much for tuning in. Thank you for watching, and thank you for your questions and for your interaction. It is very much appreciated. Once again, I apologize for not being very sharp, not being at my best. Um, but hopefully next time I'll be better. And no questions. Thank you. Thank you very much, Yahya. John, we already analyzed your USD. You can go back in the stream and watch it. Once we close this stream, you can go back to the video and watch it. All right, so that's it for today. Have a great trading week. Our prayers to our brothers and sisters everywhere in the world facing war and facing danger. Um, hope everyone prays for our brothers and sisters everywhere. Take care of yourselves, and I'll see you on the next one. Bye bye.